Oh, there we go. Hi. Can you hear me? Am I audible out there in YouTube land? I'm going to assume that you can hear me. We're having some issues here, but thanks for joining me on my first live stream, Firewalking Journey. This is, just a chance to speak to you all and hopefully get some back and forth dialogue. Right now, as I said, I'm still waiting to see if there's any feedback. If you can hear me at all, please say something. We also had camera issues as well, so I'm just using my MacBook camera now, FaceTime camera. All right, I think you can hear me. What's up, Janelle? Okay, so this is Firewalking Journey. It's my YouTube channel where I talk about cities, investing, and travel. I guess the tagline is what. Oh, I'm getting some feedback. Picture looks fuzzy and the lights are causing glare. Uh-oh. Okay, thank you for that. This is a learning process. Yes, thank you. So Firewalking Journey, I'm still working on the tagline exactly, but I'm going with something along the lines of things that matter to a global investor and entrepreneur, which is sort of shining a light into my life, my family's life, and what we do and what we think about as we look for investments all over the world. So, okay, this is cheesy. Here we go, quick video. I don't know how it's gonna be, but I'm ready for anything I do. What's up? It's my wife, Kelly. She's here to talk about what she's doing with her company, Finclusive Ventures. So hi, Kelly.
Hi.
What is Finclusive?
Finclusive Ventures, we're a company that invests in early stage startups. The goal is really to invest in underestimated founders in overlooked markets to find hidden opportunities. Because there are a lot of, from what I've seen, there are a lot of startups that are really, really good, doing really well. However, somehow without the connection, they're not being found. So what we're trying to do here is to really solve that capital gap issues.
So you're talking about investing into startup companies and specifically looking for companies that might struggle for capital, struggle for investment because they're not a prototypical startup.
Yeah, maybe they're not in Silicon Valley. So something that I found out in 2019 is really that there's only like 2.5% of VC funding that goes to women, and about the same percentage that goes to people of color, Latin people, and also Black people as well, mostly. And it has a lot to do with how the system has been created for a while, right? And all the funding goes to Silicon Valley, and it's just sort of not intentional, but it is the way it is. So Finclusive, in a way, we're trying to intentionally look for other markets and look for other communities that we could find these startups and connect them to capital and help that they need to scale.
Okay. So I guess you kind of are touching on this, but I want to know, why did you really feel like, why did you feel compelled to create Finclusive?
Yeah, I mean, we were investing in real estate before, and there was a time that I felt like I really don't feel any different after we made certain amount of money, or like that our capital or asset capital reached a certain amount. I felt like I wasn't learning anything new. And then I just really wanted to start investing in something that I felt like I'm making more of a difference in the world. And before, my background was in engineering, was in tech, and I don't know why I never really invested as much into tech. So then there was a time that I was really trying to invest in tech a lot more, trying to explore a lot more. And then in the middle of it all, and in my research, that's when I found out about the funding gap. And then I felt like, hey, these are overlooked startups. Just like when we were investing in Jacksonville, we were investing in properties that were literally 5 digits, and people are just like not buying them somehow, and they're like, let's go buy them. Like there's no reason to not invest in these. And I feel like it's the same thing with Finclusive, where like these startups are gonna do well, but somehow everyone just sees the startups that are like in Silicon Valley and like really hot markets. And I think right now through COVID, people are starting to see that it's not just one market you would create. You would have really great startups. There's markets all over that could produce really, really good startups. And then the other part is the whole funding gap issues. Like, because I was in DEI, diversity, equity, inclusion space for a long time, and people talk about women in tech, like, all these ERG group in tech. But then I couldn't believe that I didn't know about the whole funding gap issue in the private world. And I feel like I really care about this space already, and then I didn't know. So I just really wanted to have Finclusive to be a platform to make this more of awareness. And it's not just about doing good, but it's also making money, right? So I think I think it's a long and complicated answer, but at the end of the day, I feel like that's why. It's just what I want to do. Yeah.
Okay. Yeah. I think I understand the parallel that you were trying to make with real estate. To me, it's like when you invest in real estate, when you invest in stocks, you want to invest in undervalued assets. And so in a way, founders that are overlooked, or areas, sectors that are overlooked, are essentially undervalued as well.
Yep.
So that makes sense. Can you back up a little bit and tell us, I guess, more of the ABCs, the basics of what you do and what you mean by investing in startups?
I hear my second son. Investing. So a lot of the startups that we invest in are pretty much pre-seed, seed stage, or some of them are heading into Series A. When I say investing, it could be syndicating. So we're doing 2 things in parallel. We're fundraising for $10 million funds that we would probably invest in 25 to 30 startups, and we would continue to help them with the scaling their operation and also business development. Separately, we're also doing SPV, which is special. Oops.
Okay.
Yeah.
Surprise guest.
Yeah, so syndicates to just invest in one company at a time. However, we want to keep the cap. We want to keep the cap table clean, right? So we want to be able to also inspire other investors to invest into these startups and keep the founders' cap table clean, to have just one big check. So we co-syndicate with other venture capital companies as well to go into these startups. And then separately, we also help them to fill up the round outside of our own check size as well. I don't know that.
I think there's a few things there that may need clarification.
Okay.
Syndication, and also why you want to use to keep the cap table clean.
Yeah.
What does that mean?
So cap table is so it's pretty much imagine like the pie chart for who are the shares that go to these people. So in order for venture cap VCs to be interested in you, a lot of time you want to have very few number of spots on there. You want to just have like 3 to 4, but that's pretty much impossible. 3 to 4 people on your cap table. Right? Obviously, the co-founders and maybe some employee pools and your advisor maybe, but then a lot of time you will have a mess. But if you have a syndicate, that means that it's a company. It's pretty much actually a shell company that's created for the sole purpose is to invest as a single check into the startup. So that way, like even 20, 30 people are investing into a startup, it would still be just one, it would look like one spot on the cap table, and it will be a lot cleaner. The startup founder doesn't have to go out and talk to like 20, 30 angels. They just talk to the syndicate lead, and the syndicate lead communicate back to the other investors that way.
Right. So, okay. So what you guys do, you handle syndicates, syndications, and then you also do a fund.
Yeah, so we're fundraising. Yeah.
Okay, cool. Well, what besides the overlooked founders, overlooked sector, what is Finclusive's focus?
Yeah, so I would say the horizontal focus is what I've been saying. Really overlooked founders and overlooked markets, and our sector focus, I would say, is we invest in what we know. And for now, what we know is really fintech, future of work, climate tech, and something that has to do with branding type work, brand development, because of my co-GP Ali, she's had a decade of experience doing brand partnership for like music festival and different types of companies, entertainment business, very different our background. I'm in engineering, right? So and also because I think that I'm just also drawing parallel to our investment time in Global Network, right? It's that we know what you have to find your differentiator, and you want to just focus on the things that you already know. And then once you see enough deals, and you know which ones are actually good, and then you can focus on those. And I also see like helping the startup is kind of like us rehabbing at home, right? Like you see the potential, you see like there are things that even if they're not perfect, obviously a startup is not perfect, then you see how they can get to point B, yeah, so those are our focus, like those few sectors. Yeah.
What's an example of fintech and of climate tech?
Yeah, so fintech would be anything that has to do with money. We focus more on financial inclusion, Finclusive, right? So one company to invest in is called MTech. So, and what they do is they create actually the cryptocurrency platform for central banks. So if you imagine all of our currency right now, the coins and the paper bills are all replaced by crypto now, and it's creating central bank digital currency. So the central bank doesn't know how to do that. So then this company, MTech, actually have several clients now from the Caribbean and also in Africa, and actually they're working with some of the central banks in some regional banks in the US as well on creating that, because it's a really, really old industry. So, and then for future work, it's that particular company is also similar to what we would say like future of work, right? Future of work is disrupting the way that old industry has been doing things, and like what is the future of work gonna look like? So a company that we're looking into investing, like not really invested in yet, but it's something really unsexy, right? Like Ben's company actually. What they do is they have their B2B marketplace platform, and then what they do is they help maintenance the facilities department, and they connect all of their equipment, all of the HVAC and all those equipment. They do it for free for you. But then what they do is they connect to the OEM side of these equipment, and then they can just purchase on their platform, and they get a cut from there. But, I know because I had engineering background in doing maintenance for a bit, and I know that from there they actually use Excel. So that's like some of these industries are actually very old and like not digital. So I think there's going to be still a lot of digital transformation that's going through into some of these unsexy work sectors. Something else that they do is that they connect with the utilities company. So then there's like rebate that's tied into that area. So then when you enter all your system, then you can see with a press of a button, they can choose to see which rebate to get. And then that can also like save their energy. So in a way, I don't know, that's not exactly climate tech, but it is helping with reducing carbon footprint in some way. I don't know if you want me to go to climate tech, but climate tech is pretty much anything that reduce carbon footprint for in our definition. Yeah.
So it's always forward thinking, I guess,
Yeah.
is the key. Is there a point in the life cycle of a company that you focus on?
Yeah, so early stage, so mostly post-product. There's one company that we invested in that's is pre-product, but if it's pre-product, you need to have really, really strong IP. Otherwise I wouldn't, because that means that like no one else could develop this, right? However, so then like most of the companies that we develop will be post-product and with some traction. And it doesn't mean that you have lots of customer, but what we want to see is customer really, really, really loving your product. And they actually want to recommend someone else to use the product, or they would say, I cannot live without this. And that is also with something that they already paid, not like just free stuff, right? Unless the free thing is gonna have just like Ben's company I was talking about, has a way for you to somehow create a lot of transactions marketplace that is a no-brainer type transaction, right? And that would make a lot more sense to have the traction to be just user only. Otherwise, I'd really love to see some revenue.
Okay.
Yeah.
So to break it down, what you're saying is that a company that's seeking investment, you don't want to hear pitches from people who have no product, just an idea. You want something prototype or more. And then if they have users, then maybe you'll think about it. But what you're really looking for is not just users, but paid users. And you want to see what kind of traction they can get, even if it's a very small market right now, as long as there's actual traction.
Yeah. Okay.
And then that's where you would begin to consider investing.
Yeah.
How far do you take that? If you invest into a company that's at that early stage, where are you looking to bring them, and then when would you exit?
Yeah, I mean, when you exit is really when they get acquisition, right? Or IPO, those are like the only two exits. Or if there was a round that there is an investor that want to like pay out everybody. But usually at pre-seed and seed stage, you're just doing convertible notes so that you wait till your price round. Like, so what we would like, one of our value add is really to look for your next round, really help you with filling the next round as well, connecting. Because one of the way that startups die, number one and number two ways, is that they can't fundraise anymore. If you cannot fundraise for the next round, then you die. So that's something that you have to consider. Yeah.
Okay, so I guess for somebody who's new to investing into startups, what you're explaining is that you would look to invest into a company that you think has potential, and then you are really with them all the way until there's an IPO or until there's a major acquisition.
Yep.
Okay, and so then an investor would need to be prepared to continue to invest.
You don't have to. You can just not invest anymore.
And just be.
But yeah, because you can just continue getting diluted, and that's okay. If you're early enough, then it's okay. Sometimes.
So then, what would the target returns be in this area?
Yeah, I think in pre-seed, like you're really looking for like 50x for the ones that you
50 times.
Yes,
your
50 times your
investment.
original. I think maybe like seed stage you can do like 20x or something like that, and that's like what you're hoping for to get in. But then you're not just investing in one, you're investing in a bunch of companies. So then at the end, I think as a fund, you end up being like maybe like 4x. That will be quite a good return.
Okay, because some of them might 50x, some might 10x,
Will be zero.
and then the rest
Yeah.
goes to zero.
Yeah. Yeah.
Okay. So yeah, this is very different from where we started off in real estate investing, where I think the risk of going to zero is negligible. And yeah, it's
but the benefit is, I think for us is we know how we can help the startup. The way we would help the startup is really helping them with operations, the operation structure, and then scale. Because a lot of companies, they just want to get a lot of clients, but then there are startups that, you know, because they got so many clients that they start to have the problem, you grow, but then your problems also scale at the same time. So then they have to turn down their customer, bring them, they have to close their account, and then just stop at the pilot stage. So I would say at the beginning of your stage is really to make sure you know who your clients are and really make your product really well, so that when you scale, the problems are minimal, and then you can focus on scaling.
Yeah. Okay. Yeah, I mean, if anybody has any questions for Kelly, go right ahead and write them in the chat box. I guess I'll ask you another question. What are your goals for Finclusive in the next year?
To continue investing and also find like-minded investors that would want to invest with us, because as you can see, the money actually get tied into the startup for a long time, right? So hence, when we were investing in real estate, we are much more, we can continue to leverage, and then, but with this type of investment, it's really a long game. I guess real estate is also a long game, right? But then the more people invest in early stage, the better, because then you can also spread the word, and also you're much more collaborative, and then you can get more people to have different perspective that could also help the startup. So that's one, to really grow our syndicate community. So if anyone's interested, it's at finclusive.vc/investors. You can find out more information. We also want to create an angel program as well to help more people that are not traditional investors to do more startup investing. Separately, we want to continue to invest in more startups, and then also finish fundraising our fund at to $10 million. Those are what we are.
Finclusive.vc/investors.
Yes.
Okay.
And then actually also startups can also go on finclusive.vc/startups to go submit your companies as well. And even when we can invest, and we because it's outside of our interest or expertise area, we would pass along to other community of VCs, like Transact Global or Women in VC, or 500 VC, various communities that would be interested.
Cool. All right. Is there anything else you want to add? I don't know. We're open for questions about anything, really. It doesn't just have to be venture capital and angel investing, but anything really.
And we are in a friend's house.
Yeah.
This is a game room/office. If anyone's
this is our
wondering where we are.
This is the first trip since March of 2020, right before everything shut down. We took a trip, and then now, 15 months later, this is our first trip. We came up to New York, and now visiting some friends in Connecticut. So. Yeah.
Thanks for checking us out.
Yeah, for sure.
Someone said hi, Kelly.
Yeah. There's a lot of love from people, but no questions. So.
Okay.
Yeah. Well. I didn't really know what to wrap up with. I just figured we learn about Finclusive So if anybody, as Kelly said, wants to get involved as an investor, as a founder seeking investment, or just wanting to know more, you can go to finclusive.vc to learn more about Kelly, her
Or you can
founding
email
team.
us.
And yeah, I'm excited to see what they do and how they grow. It's been a whirlwind so far, just in 2021 when all of this came together.
So yeah, thanks everyone.
Yep. Thanks. And I made this banner, so subscribe.
Subscribe.
And
and what?
communicate.
What is communicate?
Comment, email. I've gotten a lot of
Why do you have
emails from
communicate?
people. So if you want, you can find my email on the YouTube channel, or I can just say it's project.
But if you email, I think maybe you should just do a Q&A to respond to people, to all the questions, because there's some questions that are like 2 pages long.
Yeah, that's true.
Like crazy.
So yeah, if you want to reach out to me, you can find me on YouTube. Obviously, you're watching. Wait, I also have a YouTube channel, Project Maximus, and then you can find me on Facebook, Instagram, TikTok. I guess sometimes I'm on there at Project Maximus as well. And yeah, I'm always happy to hear from everyone. Judy from Asian American Legal Focus, she says hi, and she says have a great day.
All right.
Thanks everyone for coming.
Bye.
Bye-bye.